Good evening for all of you. Hope you all can hear me well. So today we will be doing our seventh, with me, this is my third session. And today will be the seventh day for your course. So according to the course outline, today we have to do how this AI will work in financial services. If you check for the course outline, not the course outline, actually syllabus or the topics, whatever we are going to cover during this entire diploma. So we will be discussing about how the financial stuffs, how AI will relate with the financial stuff skill we will be learning, or else we will be having a small discussion. So now this entire slide, if I go through with this, as you can see, this is a white paper which has been published by, this is an online paper. It's available for all of us. This has been already published by the World Economic Forum for 2025. Initially, it was published in 2025 January. So this is artificial intelligence in financial service. So what do you think? Where we can see artificial intelligence? If we think about in another 5 to 10 years, how these financial services will affect with artificial intelligence? Maybe it will be there might be, we can see the advantages, as well as sometimes there might be some disadvantages as well for these financial services in artificial intelligence. So let's go through one by one of these ones. Okay. So this is the entire content. We'll check according to the time. We have only 2 hours now. We'll check what are the topics we can cover. We'll just go through in brief. So we'll go through in brief, and I'll share this document with you as well. Anyway, if you search for the topic, then you can easily find out this. You can easily find out this PDF, no problem. So we will be having a small introduction, and also how this AI landscape in financial services, and also then we will be discussing about seeing early value from AI implementations, that's also there. And then moving towards an AI powered future, uh, AI in the workforce, AI risks and challenges according to the when it comes to finance domain, and then prioritizing the responsible AI, and also at last AI regulation challenges as well. So these are the few topics which we will be discussing today, and finally we will be having a small conclusion and a small discussion on this. Okay, so okay, these are the people who have documented this. Okay, a small introduction. What it says. So now, since this entire diploma is about AI, artificial intelligence, now you already know what is artificial intelligence. So normally, with me, we discussed how the artificial intelligence and the NLP works, and also, sorry, and also how it relates to, what we call businesses. And then in the next fifth lesson, as the fifth lesson, we did marketing purpose ones, how we can apply these artificial intelligence stuffs in marketings, and what are the future developments we can think and do. Likewise, we did those ones. So now what will happen, here we have a small introduction. So, artificial intelligence continues to present unique opportunities and challenges across financial services, disrupting. This is the latest one. So, 2025 January means this is the latest one. It's really, it will be really beneficial for you all because this one is the latest updated report. So, here financial services disrupting business models, investments, and the workforce. We already know it. Now, what will happen here? So, as you all know, according to the with the use of artificial intelligence, the financial services also has been digitizations. So the digitization of financial services from the advent of ATM, that is ATM machines, automated teller machines, and also the online banking, we already have these ones as financial services so far. I mean, without artificial intelligence, also we had these ones to the widespread use of mobile apps. So now there are so many digital mobile app for bankings. So there are so many apps. So these transformed the industry from all perspectives. When it comes to perspectives, we have the provider side, customer side, employee side, and the regulator side, and also the other stakeholders as well. So, what will happen with this artificial intelligence? This AI is supposed to have at least as profound an impact, albeit with important differences. That's what we have for these ones. Then the digital era. Now, in the digital era started in mid 1980s and is broadly considered to have run for 3 to 4 decades. So, what will happen here in artificial intelligence has in fact been around a lot longer. However, the introduction and the widespread adoption of generative AI and its increased accessibility 2 years ago have had a seismic effect on technology and business as well. So, its potential to automate and also augment tasks throughout the operating models of most organizations, which is quickly established. So it has one of the most transformative technologies the world has ever seen, and also banking, insurance, and capital markets and payments. When we do all our payments are among the areas which its impact is expected to be most pervasive. So we can see the most effective areas with this artificial intelligence is banking, insurance stuffs, and the capital markets, and also all the payments methods as well. So rapid speed at which AI is maturing, however, combined with the explosion of potential use cases, presents a particular challenge for financial services executives and board members as well. So most have limited knowledge and experience of technology. Yet, they are expected to develop a vision of how AI will change their industry. Still, though, they are in a vision of how AI will change their industry, their businesses, and their operating models as well, their offerings and their experiences and their workforces, everything. So, as some early adopters of Gen AI are already trumpeting their achievements, financial services leaders are starting to feel intense pleasure to strategize their investments to seize the opportunities that are patiently on offer. So, at the same time, executives will need to act immediately and to define their systems data and the customers against a potent new threat while preparing to comply with a raft of new regulations as well. So, what will happen here? According to the scenarios, we have to find out, we have to regulate new regulations because of this AI. According to these financial services, how will it works? So never before has the industry attempted to reinvent itself, its practices and its offerings so extensively at such a rapid pace. So this paper aims to help industry leaders address this challenge by summarizing the areas in which AI is likely to have the greatest impact. So, the fundamental steps that are needed to achieve this impact and the risks posed by the technology alongside how they might be mitigated by examining trends and forecasts on future trends in the industry. So the paper hopes to encourage engagement from all parties in the future role of AI financial services by prompting a better understanding of both the potential and the risks of the technology. So it seeks to help build a foundation for the effective and responsible application of AI for the benefit of all of us. So AI landscape in financial services, when it comes to artificial intelligence landscape in financial services, we should know that financial services is leading in AI investments and also the harnessing and also the technology to enhance efficiency across functions and reduce risk and manage fraud as well. So these are all AI landscape in financial services. So what are the potential impact of LLMs across all major industries? You can see that here we have the banking, here we have the insurance, capital markets, software and platforms, health, communications and media, retail, life sciences, high tech, travel, automotive, public services, energy, utilizers, industrial. These are the work time distribution across US industries. Some areas are not in Sri Lanka, but when it comes to US, these are the main areas, these are the main domains which we can see work time distribution across. Okay, so this blue color, dark blue represents the high potential for automation. That means we can apply more automations there, and for the this color it will give us the high potential for augmentations. We will be discussing what is the difference in between the automation and the augmentation in future. So then we have the lower potential, and at last we have the non-language task as well. This is a summary. This is a summary with the potential impact of LLMs across all major industries. Okay, landscapes, artificial intelligence landscape. So what it says, the financial services is leading in AI investment, harnessing the technology to enhance efficiency across functions and reduce risk and manage fraud as well. Fraud risk, those are the things. So these financial services firms have been using AI in their processors for decades, and shortly after the advent of Gen AI, it became advent that these firms, because so much of what they do is language based, because we already did about the natural language processing as well now, had a greater potential than most others. So to capitalize on a large language models, that is LLMs, large language models, In fact, the tasks that take up almost half of all the time spent by financial services employees are well suited for either automation or augmentation. So these are the things we have. Then the estimated global AI spend by industries, that is in 2024, with the data which they have collected year 2024. I mean, before that, then they have drawn this one. This is the AI platforms spent by industries. See, the latest, see the latest information is there. So this is information technology, and what will happen? We have the advanced manufacturings and software and the platforms and healthcare systems, consumer industries, high tech, automotive and mobility, utilities, mining and the metals. Not only that, the financial services, that is the biggest one, financial services, and then we have the media, entertainment, and sports. So these are the AI platforms, spent by industry during 2023-2024 period era. So growth in spend or revenues and relative total spend as well. So these are the AI platforms spend or the total revenues 2024 for EE. So make sure, how do we read this type of a chart? With this bubble size, it will show the total AI platforms spent. So this is the most spent one. Likewise, we have to read this entire graph. That's what it says. Okay. And then okay, it's no surprise, therefore, that financial services businesses are exploring, investing in, and implementing AI at a faster rate than other industries. So we can see it in this figure. So, as its early pilots deliver promising outcomes and start to be scaled across the enterprise, so the commitment of the industry is only expected to deepen. So, what about the financial services? The financial services firms spent a significant $35 billion on AI in 2023, with projected investments across banking, insurance. So the capital markets and the payments expected to reach, all these ones are, they are expected to be $97 billion by 2027. We can't even think about these ones. As soon as financial services firms started to examine the potential Gen AI, how we can apply all these artificial intelligence theories, artificial intelligence into our financial services, it became apparent that the technology could transform processes and practices all the way from back office operations to front end customer facing experiences as well. Its ability to process and reference large amounts of data efficiently revealed numerous opportunities for automating routine natural tasks in areas such as sales, maybe it's customers and employee experiences, fraud and risk management. See, these are the areas. And the technology developments, all these ones are the areas whatever we have to pay our attention. So in addition to these ones, we have the companies are developing or acquiring a variety of AI powered tools. When it comes to AI powered tools, we already discussed Gen AI, Gemini, and ChatGPT. Not only that, there are so many tools. we'll do a session on that as well, that help employees perform their current roles more efficiently and effectively. So it remains to be seen whether there are any financial services tasks that will in the long run be unaffected by artificial intelligence. Though these type of affections are there, remember, there's a high risk of the security side as well. We will be discussing these ones. When it comes to financial services, we have to think about potential risk as well, when we might have to face. So we need to pay our attention on those ones as well. So this is a figure 3, that is the analysis of the likely impact of generative AI on banking functions. How it works. See, a revolution fueled by Gen AI banking example. You can see here we have a consumer and private banking sectors. So what are the functions we have? We can have the deposits, we can have the unsecured lendings, and we can have the secured lendings, maybe secured lendings also there. And those are coming under the consumer and the private banking. So when it comes to commercial purposes, commercial and the corporate bankings, normally we have the transaction banking and the lending banking, and also the secondary markets as well. All these ones are there for the commercial and the corporate banking. Then we have the wealth management. For the wealth management, we have the portfolio management. Now, what are the things? Here we have the product pricing, okay, and also the sales and the marketing field, onboarding and the underwriting stuffs, and also the operations. These are the we can't say it as services. These are the impact sites. So these are the functions which we can have in a bank. So then they have marked with the blue color lines, that is the estimated impact of Gen AI. So if it's colored with light blue, that means it's a low impact one. If it's colored with this one, that is the medium impact. If it's colored with the dark blue, that means the high impact. See, for the audit now, it's impacting, if the impact is really high. For the compliance stuffs, that's what I told you. For the compliance stuffs, with the growth of artificial intelligence, it's also kind of a high impact area. Financial crime and AML and the risk management, all these ones are high impact areas. But what are the low impact areas? If we think about the banking sides, so what are the low impact areas? Those ones are data governance, project management, and procurement side. These ones are low impact one. The moderate impact ones, the medium impact ones, data sourcing strategies, and the account and the portfolio management. These are what we have for the medium impact one. So this is overall how the impact of generative AI on the banking functions will work. That's what we have here. So given the impact that AI and Gen AI in particular has on most financial services functions, so there has been a surge in the development of industry specific solutions, both through in-house initiatives and also those of technology providers such as OpenAI, Google, Microsoft, Amazon, and many others. So an examination of the functions at which most investment is directed sheds light on how AI generates value in key areas. So you can see those ones in table 1. This one is the most promising AI use case examples. So across financial services. See, what are the industries they have taken to the topic? Banking industry, capital markets, payments, insurance, and also the cross financial services as well. All they have divided, or they have considered these five industries. So in banking, they have considered the sales and the service function. In capital markets, client services, or we can say investment management. For the payments, we have the fraud management and the detections. For the insurance, we have claims, and across financial services, we have the risk management and the underwriting as well. So these are the functions which we have relative to, respective to these industries. So if we make a small description, that is, for the banking, we have customer service agents receive quick and comprehensive information on all aspects of products, policies, and processes from a variety of sources. And also, what are the value deliverables? What are the value delivered here? It will be a greater agent efficiency. It will be a greater agent efficiency, and also it can be caused to increase the response accuracy, and also it helps to make the response time is more quicker. If we consider the capital markets, in capital markets, if we take the client servicing or the investment management as a function, then that means how they apply these artificial intelligence models. So most of the time, firms use AI models to create investment portfolios, and also they offer financial assistance and provide clients with real-time insights and trading recommendations as well. So what are the values which we can deliver? Enhanced client satisfaction and retention, and also the competitive advantage. For the payment side, we have the fraud management and also the detection. So, preemptive fraud detection includes technologies that can proactively seek and identify suspicious behavior, or else it may be anomalous events before fraudulent transactions. So, what are the values which we can deliver? That is the improved fraud potential for customers, enhanced customer experience by minimizing false positives as well. For the insurance side, we have the claims. So, the automation of claims and customer document processing. So, what are the values? Improved workflows, greater agent efficiency, and also the streamlined document collection and the validation as well. So, across the financial services, sometimes we might face the risk management and the underwriting. So there we have to do the prediction of fraudulent transactions, and also it might be more effective underwriting processing and the risk scoring. So what are the values? We have reduced internal and external risk, and also it's better protection of data, improved underwriting processing times, greater accessibility to established credit scoring and evaluation as well. Same thing in the across financial services, we have the technology developments. So in technology development side, we have streamlining the software development life cycle from writing code to automation testing, as well as understanding and decommissioning of legacy code environments as well. So what are the values?
I really understand that, May. So, what do you mean decommissioning of the code?
Okay. We'll discuss one by one. So what will happen here? What are the values we have? That is for the improved workflow and accuracy, and also increased efficiency and the shorter development cycles, reduction in technology debt. So what are these ones? These are the actual industries and the functions functions with relative to these ones. So what it says, streamlining the software development life cycle from writing code to automations. You already know most of the times now in software industry also, they also facing uh, they also facing they also upgrading everything with this artificial intelligence. They are also most of the time nowadays in say what we call the software side also, they are facing this sometimes the job issues as well because of this artificial intelligence. Most of the time we can automate the entire process. We can automate the entire process, writing code to automation testing, as well as understanding and decommissioning of legacy code environments means. So the valid codes, when it comes to finding out the it's also coming under the QA process. How we gonna test all these ones, test automation side, so we can check whether it's correct or not, whether it's legal or whether it's valid. Likewise, we can check most of the time now all these entire steps when it comes to software development. You know that we have a software development life cycle from collecting data to, I mean, from planning to deployment and the testing stage. So this entire process now they are automating with these tools because of this artificial intelligence. And also these writing these are developing, and also these ones are automating with the use of what we call the artificial intelligence. So that's what here it says as the that's the whole idea of this. So here how we can improve these ones, that is improved workflow and the accuracy. So as I told you, and also the efficiency also improved. And also we have, because of this automation, we have a small shorter development cycles. We can have very shorter development life cycles, and also reduction in the technology debt as well. So these are the values which we can have with the use of artificial intelligence according to these perspectives. Technology development, software sides. So we have so many development life cycles when it comes to waterfall models, and also now we are using agile methods. During the entire agile methods also, this is the same scenario. So we can check and we can validate all these codes and things. Okay. So for the seen early value from AI implementations, now what they say, after achieving success from efficiency opportunities, businesses are developing future strategies backed by lessons learned and recurring themes. Now what it says. So 70% of financial services executives believes, that means most of the financial services executives believes, that this artificial intelligence will directly tie to revenue growth, directly try to revenue growth in upcoming years. It's obvious. So what we'll say is, it is clear from the above that there are countless potential applications of artificial intelligence within the operating models of financial services firms. However, most surveys indicate that the primary objective today is efficiency. This is understandable as cost reduction programs. So this will really effect to reduce our cost, and also as cost reduction programs, and tend to deliver more quicker and more directly measurable results than growth or risk management programs. So dramatic outcomes go a long way towards building support or continued investment. So nonetheless, this 70% of the financial service executives believes that AI will directly tie to revenue growth in upcoming years by enhancing customer experience. Yes, obvious, and making products and the services more personalized way, because with the use of them, when it comes to chatbot and all tools, we can select most of the things as a customized one, a personalized one, so making products and services more personalized and relevant, and also enabling innovative new offerings, empowering cross and upselling, and improving security against potential threats as well. That is the hardest part when it comes to financial services. So there are of course many ways in which artificial intelligence can enable these improvements as financial services leaders continue to identify and prioritize new use cases. So what are the new use cases, and also they will develop their investment strategies according to that. However, there are common themes that frequently recur. What are those? First one is the personalized customer experience. How we can personalize this customer experiences with the use of artificial intelligence. That is, with the AI powered virtual assistants can provide through thorough, tailored, round the clock support for customers' more basic issues. For example, they have given the product recommendations or else product applications as well. For complex inquiries, they can augment the capabilities of human agents like the chatbots, allowing for quicker, more relevant responses. For example, questions around investment decisions and the portfolio allocations adjustments. That's how we personalized the customer experiences. Then the next use case is the product innovation and the revenue growth. How the artificial intelligence, how the AI will affect with the product innovation and the revenue growth. That is, with this Gen AI enables financial services firms to address market niches such as mass affluent adversary services, and also more effectively than was previously feasible. Okay, that is what we call the product innovation and the revenue growth. When it comes to product innovation and the revenue growth, so it's also enabling innovation and the creation of new revenue streams. For example, by combining synthetic customer data with more efficient alpha alpha testings and the beta testing, so AB testing for new deposits and lending products. It's according to with the financial perspectives, how we gonna apply this artificial intelligence. So through its ability to process and synthesize the all this data, it can also identify and help realize opportunities for up and across sellings. So what will happen anyway, you should know what are the use cases or the circumstances where we can apply this AI implementations, and what are the early values which we can have from these ones. So one use case is the personalized customer experiences. The other one is the next one is the product innovation and the revenue growth, and also then the data driven decisions. You can see when it comes to ChatGPT also, now it has been growth. We can upload any kind of a data set. There they have so many plugins, inbuilt plugins as well, so we can analyze any data set through with the help of ChatGPT. And also Gemini also the same. With the use of all these artificial intelligence tools, we can easily analyze our data, and also we can have more insights. So because of these ones, we can take more accurate decisions as well. So the power of AI to convert large amounts of data into useful tailored insights allows the technology to enhance investment decisions, improved risk assessments, and generally help business leaders make better day to day decisions, allowing leaders to spot key trends. For example, what are the examples? Transaction volumes, and also All these examples are related to financial services. Transaction volumes, customer feedback or market trends. These are the data driven decisions. How we can apply the artificial intelligence in these ones. And at last we have the how we can improve the risk management and also the compliance stuff, because it's financial things, no, and security side. So this artificial intelligence can scrutinize data, transactions, and other events more thoroughly, more quickly, and more tirelessly than humans can. So it's been used to constantly monitor for cybersecurity threats and to identify suspicious activity in real time scenarios. So it can also be hugely helpful in relieving data collection and also the reporting burdens as well, especially during the mandatory identification process of customers, the KYC things, which we know as the KYC, that is know your customer. uh, we can give that one as an example. We also filled a KYC form in banks while we make any accounts, maybe it's a savings account or anything. So how we do, how to improve the risk management, and also how to manage these compliance stuffs and also the security sides. So then the third part will be the moving towards an AI powered future. If we think about the future, that means if we think about the future, so in this section they will discuss moving towards an AI powered future, how we can moving towards. So our next decade, AI will revolutionize the industry through enhanced customer experiences and also the customer support and also the decision making capabilities. So here also they have given, thanks largely to the growing use of AI and data and the value companies are starting to generate from their AI strategies, financial services businesses will look very different a decade from now. With further platform digitalization, smarter automation, and also more interactive decision based workflows, we can expect to see significant changes in how the customers bank, customers investment, how the customers borrow, and also how the customer insure their assessed as well. So these services they use will become more accessible, efficient, and also more personalized as well. So what are the benefits for customers which we can have mainly into these categories? So these benefits we can have in two categories. One category is the enhanced customer experiences side. The other category is the improved customer support side. Those are the two categories which we have to consider. So for the enhanced customers experiences, the firms will use artificial intelligence to synthesize massive amounts of data, and this will include financial data, for example, bank accounts, investment accounts, and insurance policies, all these ones. So and other customer information, for example, key moments such as the first purchase of a home. So this will significantly improve the efficiency of most customers' interactions with their bank, and also it will enable more relevant advice that helps customers plan effectively for retirement, major purchases, or even the healthcare related expenses as well. So how they can improve the customer support, we can see by using smart AI agent chatbots, or the customers could receive audio and video responses nowadays uh, to their questions, and also the AI agents can action custom requests without human intervention, no any humans beings involved. And also they can improve the customer support by providing quicker and more accurate solutions as well. So those are the few things we should know. And to achieve these improvements and keep up with the rapid pace of innovation, business leaders will require a flexible AI strategy. So they will also need to continuously monitor a technology landscape, especially over the next 2 to 3 years, as developments advance in key areas. So another one will be small language models, that is SLM. Earlier we compared with the large language model, that is LLM. So now here we have the small language model, that is SLMs. So SLM is a machine learning algorithm that has been trained on a data set that is smaller and more specific than those of large language model. So the small language models are typically deployed for single specific task. We are using it to, we are using it for only one specific task. For example, answering customers now, it's only for the answering customers. Questions about a particular product. They can be more efficient and faster than the large language model, due to their size and also their use of a more targeted data set, because we are only considering one use case at once. So it will be more efficient and more accurate, as well as we can have the results, efficient results, and also it's really fast. So retrieval augmented generation, that is RAG. Now what is RAG? That is RAG is a process that enhances the capability of Gen AI models by optimizing all these large language models, so increasing both accuracy and the reliability. Some fields are new to me as well, because I'm not in the financial side, because now only I'm also getting to know these stuffs. Some of the topics are really new. So for this RAG, that means the retrieval augmented generation. So RAG is a process that enhances the capability of Gen AI models by optimizing the large language models. So it will help us to increase both accuracy and the reliability as well. So this process uses in-house data repositories. In-house data repositories. For example, in-house data repositories means internal organization data. They are using it to internal organizational data, such as the policies, or to make some procedural documents. So that's what it says as the in-house data. So to support the validation of responses, to ensure it is combing the latest and most accurate responses, and the companies can incorporate RAG into their AI based assistants, and also they will help making them more effective and reliable at answering customer questions by validating responses against a master repository, such as the knowledge articles in a repository. So here this one is the retrieval augmented generation. And for the AI agents, now we already know these are the designed and build in to understand the inputs, make decisions, and also act on them without any human interventions. when AI acts as an agent instead of a service, what will happen? It is no longer locked into assisting with a single task or function, but can be applied to a broader range of problems and decision making opportunities. An example of this is the use of AI agents that can process inquiries, action customer requests, and make product recommendations as well. So, finally, we have the quantum computing. Quantum computing, by integrating quantum computers with conventional supercomputers, parts of traditional problem solving workflows can be accelerated, and also leveraging quantum computing in AI models would allow faster processing of larger data sets and accelerated decision making, especially in areas requiring complex pattern recognitions. So an example of this would be quicker identification of fraudulent transactions for banks and the payment processors as well. So those are the few, we can say them as the use cases. These are the few benefits which we can have. So the enhanced customer experiences and the improved customer supports, and also according to those ones, these are the new modifications, and how we gonna apply, what are the AI applications we have. Kela, here they have given these ones. And the fourth one will be, okay, let me check. I found a video today according to these financial service stuffs. Give me 1 minute. So, it's loading. Give me 1 minute. So it's about Google's AI revolutionizes financial services in 2025. 10 minutes video. Google AI Studio. It's in Google AI Studio. We'll watch that as well.
So just imagine for a minute you've got an expert just sat next to you all day, every day, watching your process and guiding you through whatever it is that you're struggling with, whether it's software that you're using on your computer, whether you're running Facebook ads or
Can you hear
it's
it?
or
Is it
doing
lagging?
anything on your PC, maybe using Canva, the design tool, whatever software you're using, whatever website you're doing, whatever you're doing online, you've just got an expert that's an expert on that specific thing just sat there. So you've
Yes,
got
yes,
multiple experts. This is what this piece of AI software can actually do. It's
In fact, they have removed that video. Give me 1 minute.
imagine for a minute you've got an expert just sat next to you all day every day. No, just imagine for a minute you've got an expert just sat next to you all day every day, watching your process and guiding you through whatever it is that you're struggling with, whether it's software that you're using on your computer, whether you're running Facebook ads or it's or doing anything on your PC, maybe using Canva, the design tool, whatever software you're using, whatever website you're doing, whatever you're doing online, you've just got an expert that's an expert on that specific thing.
Okay, now you can listen later. If it's lagging,
So just imagine for a minute
I'll share you the link of this video
got
so
an
that you also
expert
can
just
hear.
sat next to you all day, every day, watching your process and
Let me share you the link of this video so that you can
guiding you through whatever it is that you're
listen
struggling
to
with,
it
whether it's
later.
software, the design tool, whatever software you're using, whatever website you're doing, whatever you're doing online, you've just got an expert that's an expert on that specific thing just sat there. So you've got multiple experts. This is what this piece of AI software can actually do. It's from Google. Google have just come out in the last kind of few weeks, really. They were in January, the back end of December 24. Came out with so many updates in terms of AI models and different tools that can be used to just sharpen up the process and enable you.
Okay, I'm sending you the link so that you can see it. You can see it. Okay, so in here, what it says. Okay, so in here, what it says, AI in the workforce. So for AI strategies to succeed, companies must prioritize the talent development and also reskilling, while cultivating a culture that enables seamless collaboration between the humans as well as the technologies. So in here, it's a broadly acknowledged that and also they have mentioned that the 90% of leaders believe their organization needs to consider significant adjustments or maybe total transformations of their reskilling strategy to support the future as well. So it is broadly acknowledged that for AI to achieve its full potential, specifically in the future, more is required than just the technology and the data that fuels it, and also the role of people is also crucial as well. So people are needed to develop and people are needed to implement, collaborate with, and in some cases, they have to operate the systems as well. And also, as Gen AI will soon be as ambiguous as Microsoft's operating systems, and also, as I told you, Google's browsers are today. So it is vital that all employees embrace the technology and also learn how to use it optimally. Further research will be needed to better understand employee attitudes towards AI and related workplace dynamics to allow executives to plan the best path forward. So, an important step towards a future where humans humans and AI collaborate at scale in acknowledging workers' concerns about the redundancies and also the changes to their roles, and also we have to communicating the firm's AI strategy openly and credibly as well. So, as technology redefines existing roles and also it creates new roles, and transforms how work is performed, it will fundamentally change the culture of organizations and mindset of its people. So, these leaders are already starting to see the impact of AI in their workforce. That's where they say that the 90% believe their organization needs to consider significant adjustments or maybe the total transformations of their reskilling strategy to support the future as well. So the AI cannot fulfill expectations if the implementation strategy does not adequately include talent and also the culture. So there is much to be learned. Financial services firms will be competing with all others for the limited number of experienced AI technicians and will need to grow much of their own talent as well. So they have also realized that entirely new skills are emerging, such as the prompt engineers. And when it comes to prompt engineers, and they will need to train for those two as well. So the all employees at all levels will require ongoing trainings as new work tools are introduced, and also if we have already in use these tools, then we should upgrade those ones as well. So with the technology playing in ever greater role in the organization, so the senior executives will also needs to acquire a thorough understanding of its current and the potential contributions if they are to develop and execute successful business strategies as well. So at last, we have the AI risks and also the AI challenges. So for these AI risks and the AI challenges, we have AI risk and AI challenges. What are the challenges we have? So AI still poses great risks to financial services with increasing concerns of misinformation, deep fakes, and data privacy as well. So one of the most significant risks of using AI with regards to financial services is misinformation, and it leads to potential market manipulation, and also it might lead to fraudulent transactions as well. So AI still possess great risks to financial services with increasing concerns of misinformation, deep fakes, and data privacy as well. So AI is eliciting much enthusiasm among industry leaders, yet this is not without reservations. In addition to workforce challenges, there are potential negative impacts. What are these negative impacts emerging from the deployment of the technology? So these may be deliberate, where AI is employed as a weapon by cyber assailant, or the other malefactors, or inadvertent, or caused by well intentioned users as well. For example, by introducing unintended biases into underwriting decisions. So given the tremendous capability of most AI tools, the potential for harm is real. And especially in industries like financial services, or maybe for the healthcare sides as well, where customer privacy and the trust are critical to success as well. So this accounts for the slower deployment in AI in areas such as the customer experience, where the cyber threats, where the market manipulations, and also the data bias and privacy concerns pose significant challenges. So all these ones are there. Then as companies become more familiar with customer facing these AI use cases, however, they are also becoming more comfortable with managing this risk as well. So there are various risks associated with using AI in financial services. One of the most significant in the spread of misinformation is leading to potential market manipulation and the fraudulent transactions, which is an increasing concern across all industries. So in figure 4 highlights that the risk of misinformation and the disinformation is ranked first in the short term, up to 15 positions from the previous year. See, 2 years back, this is the global risk ranked by 70 over the short and the long item industry agnostics. So here for the 2 years, we have first was the misinformation, and then the extreme weather events, and also the society polarization, cyber insecurity, interstate armed conflict, lack of economic opportunity, inflation, involuntary migration, and economic downturn, pollution. These are for last 2 years ones. And for the last 10 years, if we consider the last 10 years, extreme weather events, critical changes to earth systems, and biodiversity loss, and the ecosystems collapse, and there are so many pollution cases as well, air pollution, sound pollution, the mismatch of all these biodiversity, and for the natural resource storage shortages, and the misinformation and the disinformation is happening. So if we take for the last 10 years, these are the ranks and these are for last 2 years ones. So as they say, there are various risks associated with using AI in financial services. One of the most significant is the spread of misinformation, leading to potential market manipulation and the fraudulent transactions. So which is an increasing concern across all industries. So the figure 4 is an increasing concern across all industries. So figure 4 highlights that the risk of misinformation and also disinformation is ranked first in the short term period, but when it comes to last 10 years, the extreme weather events will be there. So this is what the global risks ranked by severity over the short and the long term periods. This is for the short term period. This is for the long term periods. There are also, they have colored these ones according to the economic sides, or when it comes to environmental domain, these are the ones which relates to environmental sides, and the geopolitical side, so societal side, and the technological wise, what will happen here, they have already categorized those ones as well. Then we have the another serious and the related threat is the ability of Gen AI to create and disseminate synthetic content, actually fabricated or deep fake ones. So here, as they have mentioned, that is also another serious and also a related threat. So is the ability of Gen AI to create disseminant synthetic content. So we have to have a proper method to identify those ones. So the risk has grown as both the ability and the accessibility of Gen AI have increased, as evidenced by this 223% spike in deepfake related tool trading on dark web forums in the first quarter of 2024. So compared to the same period in 2023. Plausible images, videos, and also can you see when it comes to LinkedIn also, you can see there are so many fraud means incorrect, false, fake job opportunity posts as well. So here what will happen, plausible images and the videos and the voices can be created with remarkable ease to impersonate familiar figures to introduce fraudulent transactions or other behaviors as well. For example, a finance worker at a multinational firm was summoned onto a video call ostensibly by his chief financial officer and other members of staff, and was instructed to transfer, see, $25 million to an account controlled by the fraudsters. As in often the case with consumers who are duped by deep fakes of family members, the finance worker did not suspect that the chief financial officer and other colleagues on the call were computer generated and part of the elaborate scam. See, it doesn't take much imagination to appreciate how incidents such as this cloud negatively impact financial markets and the cloud economy as well. So, although the above risks and others have been exacerbated by artificial intelligence, the technology is also being used to detect and or prevent threats as well. So, to an increasing degree, this AI providing, one is the authentication technology, and the other one is, if it's already affected, we should know how to detect all these ones with this technology scale. So here for the authentication technology uses digital watermarks or maybe digital metadata that are embedded in a new content at the time of creation to help prove its authenticity, and how to detect all these technologies. That is, for the detection technology sources a vast landscape of activity to identify potential threats. It is also able to act autonomously in some cases to uh, nu- to nullify detected threats. For example, it can recognize fake content, it can recognize the failure content without needing to compare it to the original. Okay. Without, they don't want to compare it with the original one, they can easily identify or they can easily recognize, yeah, whether this entire content is a fake content or not. And it can swiftly examine the code with an application to determine whether its purpose is benign or malicious, whether it's already the purpose is like really harmful killer. They can easily check it. So those are the those when it comes to risks, when it comes to AI risk and challenges, these are the main risks and the challenges. And how this AI will helps to improve or to prevent, and also if it's already affected, then how to detect all these ones, and also to authenticate. Before that, to authenticate the technology also, there are some methods. That's what here they have mentioned. Then we have the prioritizing responsible AIs. On this part is really important. So 84% of the financial organizations are implementing or planning a framework to govern how this artificial intelligence will be built, and also how will it trained in our own businesses, and also how will it used, and also how will it audited as well. Okay, so the prioritizing responsible AI, executives must address self-governance and the cybersecurity sides, and also the privacy and the ethical concerns as they build out AI initiatives. Any organization seeking to benefit from AI will need to address a host of critical issues upfront: self-governance, fraud and cybersecurity, and the data privacy, workforce management, and the spread of disinformation are only the most immediate ones. So this is especially relevant in a highly regulated area such as financial services, where firms serve collectively as a cornerstone of the global economy and a bulwark that protects individual customers and the businesses against those who threaten their financial well-being. So what are these ones? When it comes to responsible AI, is a broad term that covers these and other issues. So it refers to the practice of designing and building and deploying AI in a manner that empowers employees and businesses and impact customers and society fairly as well. So these are four main pillars. What are those four main pillars? One is organizational, the other one is the operational, the next one is the technical, and at last we have the reputational as well. When it comes to organizational, that is demonstrating the new way of working and facilitating human machine collaboration. And for the operational one, it will be setting up governance and systems that will enable AI to flourish. And for the technical one, helping ensure systems and platforms are trustworthy and also explainable by design. And also for the reputational side, when it comes to reputational pillar, the articulating the firm's AI mission and ensuring this is anchored to its values, ethical ethical guardrails, and accountability structures as well. These are the four main pillars that the prioritizing responsible in AI may considered. So as companies implement AI more extensively with ever increasing sophistication and the decision making responsibility, so it will be easy to lose sight of the imperative and also imperfections such as a minor demographic bias can quickly have an outsized effect when the technology is scaled across the firm's operating models. To achieve responsible AI, leaders should leave no doubt that this is a corporate priority. And also, they should disseminate a set of practical guidelines that help to embed it in people's daily actions and the corporate mindset as well. So, as they begin to define their AI ecosystems, they will also need to evaluate their vendors and the grouping of multiple AI systems based on their vision of the role of AI in the future. So, businesses across financial services continue to prioritize responsible AI, and especially in areas like self governance, with 84% of financial organizations implementing or planning a framework to govern how AI will be built and also how this AI will be trained and used and audited to adhere to business principles and the relevant regulations as well. Alongside this, there are growing support for external groups and the coalizations like the FinTech Open Source Foundations, that is FINOS, and the Taiwan Financial Supervisory Commission. These bodies work together to support AI policy development and the collaboration and innovation while also promoting the safe and the effective use of AI across financial services as well. Then the last part, that is the AI regulation challenges. So when it comes to regulation challenges, we have the regulation of AI will evolve as business leaders. All the AI researchers, policymakers, and the uh, others continue to grapple with these issues and work towards resolving gaps in current policies. So, when it comes to AI regulations and the challenges, what are the AI regulations we use and what are the challenges we might face? So, this as AI regulation continues to evolve, there's a need to balance the pace of technology innovation against many other factors as well. So, if I go through these ones quickly, progress has been made in AI policy and the regulations. However, the topic remains a priority for business leaders. So, give me 1 minute. I'll plug this into the charger. Okay, so then for the progress has been made in AI policy and regulation. So however, the topic remains a priority for business leaders, and the countries and the regions are working to establish a standard set of policies with various groups beginning to define and publish frameworks. So the examples include the Monetary Authority of Singapore, that is MAS, publishing a set of AI methodologies, and the European Union's AI Act, and also the US President Biden's AI executive orders. All these ones concerns persist in financial services. However, about the inconsistent approaches of regulators around the world, the AU's more comprehensive AI Act compared to President Biden's AI executive order in the US. This is all these informations, all this data taken from the regards to US. So despite ongoing efforts, there are three issues that have yet to be resolved regarding current AI policies. These continue to cause uncertainty across financial services. One is the pace of innovation. The other one is what to regulate, and the third one will be who should regulate these ones. So the first uh, pace will be the pace of innovation, and the second stage will be the second stage. We have to think about what to regulate, and then we should think about who should regulate. So the pace of innovation, under that, the speed at which AI is evolving and being implemented presents a challenge for businesses and regulatory bodies that lack the resources to keep abreast of the implications and emerging threats. And what to regulate? A related challenge is caused by the proliferation of AI models and the capabilities, and also it will identify which should be scrutinized and regulated in a mammoth task. As one size seldom fits all models, policymakers will needs to focus on the relevant hurry. Policymakers will focus on the relevant use cases. For example, if it's objectivities, and also about the data models they are using, and also what are the responses we might have in order to implement successful regulatory measures. And who should regulate it? That is, the various parties have yet to agree on the appropriate level of the oversight for AI policy, industry, state, federal, or regional, as well as how variations of policy should be managed, especially globally. So, though these questions remain and are presently impacting the pace of new AI regulation, some industry leaders and the policymakers have made the argument that financial services, due to its existing regulations, it's better positioned than others when it comes to artificial intelligence technologies. So, a survey of 49 constituents from the Organization for Economic Cooperation and the Development, that is OECD, made up of various global members with experience in policy and also economics and industry, highlights to some extent that current regulations is appropriate for governing the majority of all users. So example of this can be found in areas such as consumer and investor protection, and also the model risk management, and also the third party risk management, disclosure requirements. So all these IT governance, cybersecurity sides, and the fairness will be affected. See, in figure 5, as they said, example of areas covered by existing financial services rules. So share of 49 responding these are the examples of areas covered by existing financial services rules. So share of 49 responding OECD and the non-OECD members, providing non-exhaustive examples of rules and the regulations that may apply to the use of artificial intelligence financial services. So when it comes to risk management, data protection, or the privacy and the model risk management, and investors, consumer protection, disclosure, cyber risk, governance, all these ones are the rules and the regulations. These are the number of respondents. So then they are saying that although these existing regulations do not specifically mention AI, respondents agree that the underlying principles apply regardless of the technology. There is a level of agreement that current policies cover many AI users. However, there is a call for more standardized guidance to uh, reassure business leaders and also the technology advisors, and new regulators will not determine their substantial AI investments as well. Some industry commentators hold the conflicting view that comprehensive regulation will impede the adoption of AI by banks and also insurers, leaving them at a competitive disadvantage to somewhat less regulated players in the industry, such as fintechs and also non-bank lenders, um, resulting in greater risk to customers and the global economy as well. So the regulation of AI will evolve as business leaders, AI researchers, policymakers, and others continue to grapple with these issues and work towards resolving gaps in current policy. So they will need to be clear and consistent about the purpose of new regulations and to keep a very eye open for unintended consequences. They will also need to maintain a careful balance as they seek to protect private and public interests while simultaneously prompting innovation and investing across all industries as well. So this is the conclusion actually across the globe, across the entire globe and across all industries. The excitement surrounding AI is growing, as we already know. What is known about the technology inspires great optimism for continued innovation and for the better customer experiences and products and improved corporate performance. So there is also a widespread belief that the full scope AI capabilities is yet to be fully understood. So this sense of a strong potential also gives rise to serious concerns. These begin with uncertainty about how to measure returns and formulate regulations and also how to prepare the workforce. Larger issues include the impact of AI on work as a whole, its potential to affect the reputation of venerable firms as well, and whether it brings customers closer to their financial institution or serves to alternate them as well. Alongside rapid advancements in the capability of AI and the emergence of new regulations, it will be important for financial services, or it will be leaders to keep in mind a few foundational principles that will play a vital role in achieving their goals. So what are these ones? Emerging technologies. When it comes to emerging technologies, we have to define technology visions and also we have to define technology strategies that are flexible and also continuously monitor and market and evaluate business objectives along with the technology advancements. And for the data okay, sovereignty. Sovereignty, that is for the ensure all data use meets the standards and the guidelines set, personal identifiable information, privacy and retention policies governed by the industry. And for the self-governance now, we have the standardized frameworks to govern, and also the AI use cases and the data models as well. For the cross-functional AI, that is consider AI opportunities across all functions and also will breaking operational silos and driving innovation across the enterprises. Then we should know about the measurements as well as the technology infrastructure. For the measurements, we have continuously review and assess this AI used to ensure it is beneficial to the business and also the customers and the society, and it aligns with strategic goals as well. So for the technology infrastructure, the adaptation will vary from one market to another. So consider the differences in computing power and also the infrastructure required to support large scale of AI operations as well. By embracing AI's transformative potential, financial services leaders have a unique opportunity to drive innovation while safeguarding the integrity of the financial system, ensuring both improved customer experiences and broader economic benefits through responsible and forward-thinking adoption as well. So this is what we have for the financial. Okay, so what will happen here? This is how the artificial intelligence will, artificial intelligence will affect and will affect with financial services. How will it relates all these ones? So I'll share this entire document as well with you all so that you can easily read this. And also, I have a PowerPoint presentation as well as for the summarized one. So I'll share that one as well. If I have a time, I'll record a session for the PowerPoint presentation as well. In that PowerPoint presentation, I have highlighted main theory parts, how will it work and with the examples. So I'll give that one as well. I think up to this lesson, both the previous lessons, now you have the recordings with you, right? For the previous two lessons?
Yes, we received.
Okay, I think it's already there, so you can listen to those ones. But for the previous one also for the PDF, I didn't share it with you. I'll share it with the AIB staff within today. So yeah, that's it for today. You can read these ones and also you can find out the latest report from the web as well through the internet. You can just search for it to have a good knowledge. Yes, this is from the World Economic Forum that they have published as a white paper for January 2025. Okay, we have only 2 or 3 lessons more. So yes, that's it. That's all. So thank you so much for joining. I'll send those ones, the recordings and the notes and the stuffs as soon as possible. Thank you. Good night.
Thank you. Good night.